Imagine waking up tomorrow and realizing that smart money, the big players, the hedge funds, the insiders, already made their moves in precious metals while most of us were asleep. Picture this: billions quietly shifting between silver and gold, positioning for a move that could define the next few months. Now, ask yourself, if these market giants are making bets right now, which metal are they really favoring and why? Stick with me, because we're diving deep into the battle of silver versus gold, and by the end, you'll understand exactly where the smartest investors are placing their chips. And before we dive in, if you're serious about staying ahead in the metals market, hit that like button and subscribe for daily insights you won't find on mainstream channels. The first thing to understand is that silver and gold, while both precious metals, play very different roles in the financial ecosystem. Gold is traditionally seen as the ultimate safe haven asset. It's the metal central bank's stockpile, the hedge against geopolitical risk, inflation, and currency weakness. Silver, on the other hand, is part precious metal, part industrial metal. Its price reacts not just to macroeconomic shifts, but also to demand from technology, solar energy, electronics, and manufacturing. This dual identity makes silver far more volatile than gold, and volatility is something smart money loves when timed correctly, because it can translate into outsized gains in a short period. Right now, the signals coming from both metals are intriguing. Gold has been quietly consolidating after a brief spike in response to Federal Reserve commentary on interest rates. Institutional buyers have been nibbling at positions, but the volume isn't screaming all in yet. Silver, however, is showing a very different story. While gold waits, silver's industrial demand is picking up, supply chains are tightening, and futures positions suggest a growing appetite from insiders. This divergence is exactly the kind of setup we track closely, because history shows that when silver starts moving ahead of gold, explosive moves can follow. Let's break down what smart money looks at when choosing between silver and gold. First, liquidity. Gold markets are enormous, and moving billions doesn't shift the price significantly. That's why hedge funds often use gold to hedge, not to speculate. Silver markets, being smaller and more concentrated, can see bigger swings from institutional buying. Second, macroeconomic factors. A weak US dollar is a classic tailwind for both metals, but silver, with its industrial component, can sometimes outperform during subtle economic expansions. Third, positioning data from futures markets often reveals where insiders are leaning, even if the average investor doesn't notice. And if we study that data carefully, there is a clear narrative emerging. Silver is quietly attracting the kind of buying that precedes big moves. Some might ask, but gold has always been king during crises. Why wouldn't smart money favor gold right now? And that's a fair question. Gold is king, yes, but it's also slower to move and already heavily owned. During periods of uncertainty, gold acts as insurance. Silver, being more volatile and less crowded, offers an asymmetric opportunity. If the macro conditions shift even slightly, the upside in silver can be many times greater than in gold. This is not to say gold is irrelevant, it's your insurance. But in terms of tactical positioning, insiders often use gold to balance risk while leveraging silver for potential profit. Now, let's talk technicals, because this is where the story gets even more compelling. Silver has recently bounced off long-term support levels, forming a base that's been quietly building over months. The volume profile suggests accumulation by players who understand its upcoming industrial demand surge. Gold, by contrast, is in a slow grind, facing resistance from previous highs, with momentum indicators showing caution. Smart money doesn't always rush in, it accumulates quietly. And right now, silver's setup screams accumulation mode, signaling potential upside that could catch mainstream investors by surprise. Another factor tipping the scales towards silver is real-world demand. Unlike gold, which is largely held in vaults, silver has ongoing industrial consumption. Solar panels, electric vehicles, electronics, and even medical technologies consume silver at increasing rates. Supply is finite, mines are struggling with production costs, and recycling only partially offsets shortages. When you combine rising industrial demand with tight futures positions, the recipe for a sharp upward price move is already on the table. And those who understand these dynamics are positioning early. Let's not forget the geopolitical angle. Currency instability, rising debt, and central bank interventions create a backdrop that favors precious metals. But silver, being smaller and more volatile, responds faster. When uncertainty hits, gold reacts steadily. Silver reacts dramatically. This means that in times of global tension, those holding silver stand to see bigger swings in value over shorter periods, a factor smart money always considers when making allocation decisions. Of course, risk management is key. Silver can spike, but it can also retreat quickly. That's why insiders often balance both metals. Gold provides a slow-moving hedge, while silver provides tactical opportunity. Watching positioning, inventory levels, and macro signals is essential. And right now, the indicators suggest a tilt towards silver, especially for investors looking for a sharper, more tactical play rather than just long-term insurance. If you're wondering what this means for you as an investor, it's simple. Monitor your allocations carefully. Gold remains important for stability, but silver is the metal generating real chatter among institutional circles. All signs point to a strategic accumulation phase in silver, potentially leading to the next major breakout. Timing is everything, and those who act while others hesitate often reap the greatest rewards. As we wrap up, remember that these markets move quickly, and the best moves are made with both awareness and patience. If this video helped you understand where smart money is flowing and gave you a clearer picture of silver versus gold dynamics, make sure to hit that like button and subscribe for more in-depth market insights every day. And here else, this is where I want you to engage. Drop a comment below with which metal you think smart money is buying right now, silver, gold, or a mix, and why. Share this video with your trading friends or anyone curious about precious metals so they can benefit from these insights. The battle between silver and gold isn't just about prices, it's about strategy and understanding where the real power is in the market. By observing smart money moves and tracking supply and demand, you gain an edge that casual investors simply don't have. And as always, stay tuned, because we'll continue breaking down the trends that matter, so you can watch the market from the inside, not just the headlines. Thanks for watching.